afternoon, and welcome to another edition of Unlock the Stock. This platform was created for retail investors to connect with corporate management and to get a better understanding of them and their companies. We are joined for the fifth time by PBT Holdings, and taking part in this session today is Elisna Reid, the CEO, and Francois Devet, the investment strategist and investor relations person. Unlock the Stock is only possible with our technology partner, Lumi Global. You can visit their website at lumiglobal.com to discover more about the various online AGM and investor presentation solutions. Before we begin, there are a few housekeeping notes. The company presentation will be followed by a Q&A. As usual, this Q&A will be hosted by the Finance Ghost and Mark Tobin of Coffee Microcaps. You can post your questions by typing them into the chat box, which is at the bottom of your screen. The event is being recorded and will be available on our YouTube channel soon. You will also see an email address when we begin the Q&A session. Please take note of it if you would like to be added to PBT's investor distribution list. Francois, I'm ready for you to share your presentation with us and for you and a listener to take us through the presentation, please.
Sure.
Thank you.
Good afternoon, everyone. Thank you, Vanessa and team, for hosting us once again. It's a pleasure to be here. I'll kick off the presentation and then Francois will take over from me at some point. Our corporate structure, just to explain to those who are not familiar with PBT. PBT Holdings evolved from a single technology business into a purpose-built group that brings together multiple specialist technology brands under one roof. Each of these brands operate separately with its own leadership, economics, and focus, allowing them to stay entrepreneurial while benefiting from being part of a bigger group. PBT Technology Services, trading as PBT Group, specializes in technology-agnostic data analytics and software services and solutions. PBT Insurance Technologies, also known as PBTit, specializes in proprietary healthcare administration software, and CyberPro Consulting specializes in software, data, and digital services and solutions. So PBT is a leading data analytics and software engineering professional services business, delivering enterprise-scale solutions and services for mostly JSE-listed clients in South Africa, with a presence in the UK. Our main focus is data analytics as well as software engineering, with a small specialized business unit providing software as a service within the healthcare sector specifically. Our data analytics offering includes strategic and advisory services, analytics and visualization, data engineering, and artificial intelligence. Our software engineering offering includes software engineering, digital, cloud, and DevOps, and automation testing. And our insurance technologies offering focuses on proprietary software development and implementation to clients in the medical aid industry. Data analytics, along with software engineering, contribute 87% of total group EBITDA, and insurance technologies 13%. We have over 800 multi-skilled consultants across the group, and the services they provide are technology and cloud agnostic. They have a wealth of industry expertise and have worked across 27 different countries. Our consultants are well respected in the industry and are often asked for by name. As difficult as maybe in a larger group, we still try and I believe manage to bring our consultants together as a community, albeit in the different divisions that they operate within. The expertise spans data and software, covering the full life cycle of analysis, modeling, architecture, engineering, visualization and testing. We continuously upskill our graduates as well as existing consultants through formal and informal internal training programs. Through the PBT graduate program, we provide young grads with further theoretical training focused on data and analytics. They also receive hands-on practical experience under the mentorship of PBT specialists. This program has been running successfully since 2004. The PBT Academy develops and delivers targeted training to upskill existing consultants, aligning their services with in-demand technologies. Additionally, the Academy provides fast-track training for junior data engineers and currently focuses on educating data specialists to leverage AI as a productivity tool. Our key differentiator is the fact that we are product agnostic. Partnerships and technology considerations are based on relevant industry demand. Our multi-skill consultants are able to switch between technology offerings. So AI has been a major topic of discussion over the past few years. In short, we are embracing it. We do not believe that AI will replace our core consulting roles. Rather, it is transforming how we work. As the technology evolves, we continue to adapt our skills, deepen our expertise, and further specialize our offerings to deliver greater value to our clients. The demand for our data and software consulting divisions is being driven by long-term structural trends, including digital transformation, cloud AI. In the near term, the recovery in IT spending is also supporting demand as organizations restart strategic technology projects, creating a healthy pipeline of consulting opportunities.
So insiders and management, they own quite a big portion of the business. They own about 58%. So each decision that is made within the company is well aligned with shareholders. You will also see that the increase in 2026 financial year is as a result of insiders buying more shares in the company, as well as PBT Holdings repurchasing quite a number of shares in the past financial year. So that has increased from 54 to 58%. In terms of a recap for our financial year in 2026, we changed the name from PBT Group to PBT Holdings Ltd, which better reflects the three core brands within the holding company. And in 2025, we took on a number of efficiency steps in the company, which helped us reduce the operating expenses by 10%, which also helped us to increase the EBITDA by 7% to 151 million. In the past financial year, we also continued to return a lot of cash to shareholders by returning 40 million in share repurchases, as well as 67 million through dividends. So those two together, 107 million of cash returns, is about 18% of the market cap at the start of the year. The past 8 years shows a stable and growing business. The last few years were quite tough, but we do feel that we have restructured the business in terms of costs and to bring our focus back to South Africa, which should help us in the coming years, which we are quite excited about. Oftentimes people forget about adding the dividend when looking at investing in PBT. So from a total shareholder return since 2019, we've returned 35% per year on a total shareholder return basis. So we started off with a share price of close to R1.50 in 2019, and we've returned almost 4 times that just in dividends, or 600 million over the past 7 years, or since 2019. So in conclusion, we are a cash generative business serving high quality JSE listed businesses, and we continue to look for acquisitions. If we do not find acquisitions that meet our very strict criteria, we will continue to return cash to shareholders via share repurchases and dividends. So that's in a nutshell. Thank you very much.
Francois, Elizabeth, thank you so much for coming back on to Unlock the Stock. It's great to have you guys here. Nice and short and sweet today. Leaves lots of space for Q&A. So to all our attendees, please do send through those questions via DM as usual. Type it in the chat and we'll make sure that we get it across to management. I think let's just maybe touch on the name change a little bit more. Sometimes these things look like small changes, but actually they do matter. And just going from PBT to PBT Holdings, and you've talked about a few underlying brands there. Does that give us some idea around the strategic direction for the group, that you might add some more brands down the line? A name change like that feels innocent, but perhaps there's some more background thinking there you can help us with.
Yeah, I think it speaks to past and potential future growth. PBT has evolved over the years, and we're more than just one single brand like we used to when we started in 1998. The decision to change the name from PBT Group to PBT Holdings was made to better reflect the entire service offering, and also to align with, as I said, not just past growth, but our growth strategy for the future. But yeah, at our core, we remain a leading technology business delivering enterprise scale solutions and services. And we provide these services, as we've mentioned, through PBT Group, PBT IT, and CyberPro Consulting. We can speak a bit about acquisitions maybe at some point. At some point, we would like to extend that list, but we're taking it slow and easy, and we will not do anything that does not make sense in the bigger picture of where we're at.
Just from my side, Francois, isn't it? Thanks very much for coming back and joining us once again. Just in the interest of transparency, I am a small PBT shareholder, so just getting that out there for our attendees. Just one from me, and I want to go to the last slide that we had there, Francois. I think you called out, PBT over the last, nearly half a decade or more is a very strong record of returning capital to shareholders, whether that's special dividends, the big share repurchase we saw in this last year. But I just want to touch on the kind of mechanisms of returning it, because the dividend has historically been split between a straight dividend payment that everybody will be familiar with and a capital return portion. This last one now is like 50-50. Maybe just give people a bit of insight of, why the dividend is kind of split in two, or the distribution to shareholders might be a better way of saying, instead of split in two, and should they expect that to continue, or, just give some insights about why you picked that structure, because people probably won't see that with a lot of their other investments.
Yes. Yeah. So we split the distribution into either being 50% in capital and 50% as a dividend. So how we got to that was we looked at our shareholder base and we looked for who would it be the most beneficial in terms of the split. And we saw that 50% of our shareholder base, almost to the T, it's more beneficial to receive a return of capital and 50% via a dividend. So we took that, we split it into and just paid the dividend or the distribution as such by making the split. In the past, we were able to or shareholders were actually able to decide whether they wanted as a dividend or a return of capital, but that is no longer allowed. So we cannot do that. We would have liked to, but we cannot. So we split it for the shareholders.
Let's talk AI, which is obviously going to be a big focus today. And I mean, this world is changing by the day, practically. I see it in media, you see it at corporate level. I think everyone is being impacted by it one way or another at the moment. And I was wondering, around your top 10 clients, this is your enterprise grade clients, what trends are you actually seeing around the impact of AI there, and specifically how it relates to you guys? Because this is the big question that everyone is asking, right? Your international peer group, no one's quite sure. On one hand, it looks like AI should be an amazing opportunity, should bring through lots of new work and lots of ways for you guys to add value. And on the other, people think it replaces consultants. So I'd love to hear more about it from your perspective, particularly around enterprise grade clients, your really big clients.
Yeah, so I think when you asked us a year ago, it was one answer. Today it's a different one, and next year it might be another different one, because it is continuously evolving. And I think that's the most important thing, is that we evolve alongside it. We can't shut our eyes for it. We need to keep our skills updated. It's been an interesting conversation, specifically over the past 18 months. Initially, yeah, there's uncertainty around whether AI would reduce demand for consulting services. But in reality, and again, at present, we're seeing the opposite. AI has, in our industry, become a driver of transformation. Our clients are investing in modernizing data platforms, strengthening governance, implementing AI responsibly, and integrating AI into their business processes. And those initiatives require strong data foundations, cloud platforms, software engineering, and governance capabilities, which all align very well with PBT's service offering. So while AI may reduce effort on certain development tasks over time, it is also creating entirely new categories of work. Overall, we see it as an opportunity rather than a threat, once more, provided that we continue to evolve our skills and delivery model alongside it.
I've got two questions here. Just giving the finance cost a bit of a heads up, and they're kind of related to the financial. So I know we don't have Bianca with us, but hopefully Francois or Lisna, you can give us some context. So one is around, there was a big the question is a big uptick in receivables versus the revenue growth. What's the explanation for this? I'm assuming maybe it's just timing. A big invoice just didn't happen to get paid, or one or two of them, it might be a date, just a timing thing. So maybe we'll start with that one.
Yes, that would just be a timing thing. So oftentimes around the period end, we see that people pay either let's say the 30th, or they pay on the 1st of the next month, and then it just falls outside of the reporting period. But I think to rather give you an average, which we do in our presentation, is we say, okay, look at our cash generation from our cash generated from operations versus our EBITDA over the past 7 years, since 2019, and that's basically at about 98%. So let's call it that almost all of our accounting earnings we convert into cash earnings, because for the big component being the receivables, we do get a payment. It's sometimes just slightly delayed or by a few days or so, which does throw us out on the reporting end. So we do also mention that in our reports, just because it can sometimes have quite a big swing, which could look negative, but it's just the following day we get the cash in. It's just like a timing thing.
And then the other one then is, and I'm not sure if this is in the maybe segmental notes or divisional notes within the annual report, question around the split between the EBITDA split between the software engineering piece and the data analytics piece, or if you guys break that out, or do you just look at the two of them as kind of one grouping, I guess?
At this point, we only have it as one grouping, so 87% of attributable EBITDA, with the insurance technology being about 13% of attributable EBITDA. We see that as one. That's our consulting business, so we don't want to split it. It's too much granular detail in our view. So consulting business, 87% of the attributable EBITDA.
I'll let the ghost jump back in here. I'm hogging the questions now.
Thank you. No, it's all good. I was wondering if that was the end of that particular line. So I've got a couple as well in my DM, so I'll jump in here. And it's really around your revenue growth, which I think did stick out to people in this period. So well done. And the question is a nice question to be asked, which is around your biggest constraint to further growth. Is it talent? Is it market demand? What do you think the handbrake is now that you're showing these sort of numbers again? And then linked to that, which service line do you think will contribute the most to revenue growth? Let's maybe make it short term, because obviously you can't, even their visibility is not easy. It's impossible long term.
Oh, sorry, I'm using my screen here. Sorry, so the question around revenue growth, and thank you for noticing. It's been a tough couple of years, and yeah, we're looking forward to which has been a slow turn, but we are seeing a turn. In terms of the service lines, yeah, as Francois said, the bulk of our services sits within the combination of software and data engineering. The changes that AI has brought in is changing the skills that we probably recruit for, how we upskill our consultants, and what we provide to our clients. So there is a shift in that, but it remains in line with the traditional service offering that PBT has given. I'm sorry, guys, I switched screens here for a second, and then your question around revenue growth, if you can just repeat that part of it.
No worries. Yeah, it was more just around the constraints. So, what's going to get in the way of more revenue growth? Is it talent availability? Is it market demand? What holds you back?
Yeah, again, at this point, there's not necessarily something specific that's holding us back. It's rather what has held us back and what is busy changing slowly but surely. And it has been, and we've spoken about it in previous sessions, big corporates there's been quite an overspend, I think, in the whole cloud migration period. But again, that's slowly but surely changing, and we're seeing projects coming down the pipeline, clients wanting to reinvest in the data platforms, and staying abreast with changes that AI brings to the table. So yeah, I'm seeing us almost past the constraints and at a period where we're quite excited about the future. There's always still uncertainty in this ever-changing industry that we find ourselves in. But just in terms of the past few years, at the moment, it's more of a positive in seeing the positive change and the biggest constraints hopefully behind us, and us embracing what that brings to the table.
Just another one for me. I mean, PBT historically has been, very focused within the financial services arena. That's been your kind of biggest customer grouping, and it's kind of little ups and downs, but it's kind of been pretty steady. But when I look at the latest results, that other, let's call it 30-odd% of customers has kind of quite changed in terms of the sectors that you're now servicing over the last 5 years. So I'm just wondering, Francois or Elizabeth, whichever one you wants to take it, has that been a deliberate strategy to refocus, business development and engagements on these other sectors, or is it just a function of kind of natural client evolution? Some sectors have just exited with clients, and the ones coming in have just kind of replaced those, and it has morphed organically.
It's a combination of, as you say, natural client activity and also our go-to-market strategy. Financial services remains our largest sector and will continue to be strategically important. The changes in other sectors reflect both the timing of client projects and the success of our sales teams in expanding our footprint into new industries. It's also worth noting that our sector reporting is based on the primary industry of the client. For example, a large banking client may engage us on projects supporting their internal businesses in sectors such as telco, retail, or other industries. So the underlying industry exposure is also often broader than what we can report on. The sector mix will naturally vary over time, but we remain focused on diversifying our client base while maintaining our strong position in financial services.
Yeah, so in the financial services space, we've got insurance businesses, we've got banks, we've got business banks, retail banks, asset managers, wealth managers. It's quite a wide group that we make under the financial services space. Also, like your listener mentioned, some banks are also moving into telecommunications. That's also listed under a bank, for example. So in our sector split, when you see telecommunications, that would be the pure plays like a Vodacom or MTN or Cell C or the like.
I mean, and we're seeing the telcos going the other way, trying to get more into financial services. So
yes.
So everybody seems to want to have a bank these days.
Yeah.
True.
Maybe just link to the sector specialization or lack thereof? Because I think it is something that's come through quite a lot in your reporting around the interchangeability of consultants across the different industries. Is that just because of the tech stack they work on and specialize in tends to have wide application? Is that the reason why someone can be working on a bank today and a telco tomorrow and maybe in a retailer the next week? I mean, is that how it works in practice? Is it as interchangeable as that?
Yeah, well, many of our core technical skills are transferable across industries. You know, we wouldn't describe the consultants as simply interchangeable, but the emphasis is that engineering disciplines such as software development, data engineering, cloud, AI, systems integration are largely consistent across sectors. So that gives us the flexibility to deploy skills where demand exists, again, across industries. Domain knowledge remains important, particularly in sectors such as financial services, insurance, and healthcare. But many of our consultants have built deep industry expertise through the long-standing client relationships and repeated engagements that they've had, which enables them to combine their strong technical capability with a solid understanding of the client's business environment.
I just want to touch back on acquisitions for a second. You know, PBT isn't known for doing acquisitions, not in the last kind of couple of years, but maybe if you want to maybe just touch on, of the three verticals that are there, if you know bolt-ons came along or something you know popped up, whether it's in South Africa or on the international side, whatever it might be, you know, which one of those three would it be likely to kind of slot into, as opposed to, you know, doing one to create a whole new fourth sector, for example?
Yeah, the short answer is that we're looking for acquisitions in all three of those verticals. And just to touch on what you did mention earlier is, you know, we have actually grown mainly organically over the past. Our last acquisition was in 2012. So we've mainly grown the business organically. So that is still our favorite way of growing. But looking at acquisitions, you know, we did say that we need to bolster our service offering to our clients. And, you know, since starting with that strategy of saying like we actually just need to acquire one or two businesses to just give a bit more of a comprehensive service offering to our clients, our requirements are very strict in terms of what we are looking to buy. And we have looked at quite a number of companies and spoken to quite a few people, but we haven't been able to acquire something yet. But we do think that there will be some opportunities in the future to add to our group.
Maybe if I can ask something around the contracts that you're getting from clients. So fixed price contracts, you've managed to squash down to almost nothing. And obviously that's where the margin risk sits with you, as opposed to variable price contracts where you're actually trying to just lock in a margin, and then the revenue might change a bit, but at least you've got a good idea of the money you're making along the way. Are you seeing any kind of pressure from clients to get back to a fixed price environment, or do you basically just say, no, thank you, we would rather almost not have the work than actually get ourselves back into that corner of taking on the margin risk?
Yeah, so our preference remains time and material engagements. It's, like you say, it carries lower risk, but it also provides greater flexibility for both ourselves and clients, particularly given the pace of technology change. We are selective regarding fixed price work and will only undertake it where the scope is well defined and the associated risks can be appropriately managed. We are not seeing widespread pressure from clients to move back to fixed price contracts. Most enterprise clients recognize that the agile delivery model and evolving requirements are better suited to flexible commercial models. Again, where the commercial terms don't adequately compensate for the delivery risk, we are comfortable walking away from such opportunities.
Also, just to add, you will see that in that split, in our contract split, or the revenue contract split, you will see there's a license fee income of about 2% of our revenue. So in the past financial year, our insurance technologies business, which is our own proprietary software that we license out to clients, we did secure a contract there with license fees starting to come in on the 1st of June of the new financial year. So although small in terms of revenue, that income is very high margin and will be quite margin accretive to PBT Holdings on a consolidated level. So we do expect that somewhat small license fee percentage to increase, but it will have a nice impact on the profit margins on the group as a whole.
If I can just go back, listening to what you were saying to that previous question, on the mix between, fixed price contracts and the more time and material, and would that be indicative of the way the whole sector has gone, or is it more a strategy from PBT? I'm just trying to think if you're bidding against somebody and they're offering, a fixed price contract versus, your proposal, which is a time and materials one. If I'm like the client, I'm like, okay, well, I can reduce my risk and go for this fixed price option, or has the kind of whole industry just evolved over, the last 5 years or whatever, that kind of everybody, when they're pitching for work now, is kind of by and large doing a time and materials proposal to, RFPs or tenders from government or whatever it might be?
Yeah, and I don't think it's an industry-wide change necessarily. It's strategic for PBT. We have burned our fingers in the past with fixed price projects. So you learn your lessons over time. And yeah, it's what works for us. And as I said, it works for our clients in a way that we deliver services. So we provide services, we provide solutions. So if it's a service and it's an individual or a group of individuals, they go in, they do a short stint of work. Sometimes it becomes longer. It makes sense to do the time and material based work because you actually augmenting their staff. You adding to the internal staff they have, and it's up to them for how long they would like to make use of a PBT consultant. It's perhaps a bit more difficult when it's a solution and we provide the end-to-end team, but even there, our preference would be time and material. It's probably not always possible, and that's why I said you just have to make sure that the scope is well defined and you manage that risk that is associated with it.
Thank you.
Maybe just a question around skills availability. And obviously we've touched on this like indirectly, but I think let's also just bank this and just make sure we understand it. So again, AI, the debate around what that means for jobs, etc., always rages on. What are you seeing in your space in terms of availability of skills? Because I know historically that has been a challenge, actually. We've had issues like obviously immigration and just general scarcity of skills as well. So what does it look like now in terms of finding the right people you need here in South Africa?
Yeah, it's an interesting history there, because definitely at some point it was our biggest challenge, was the availability of skills. And at the moment, yeah, it's got its ups and downs, but I think it's been more a shift in the type of skills that we currently require than just in terms of AI perhaps coming in. It's not reducing the overall demand, but just potentially looking for different roles. And we're finding it. So yeah, demand for traditional development skills has moderated in some areas, but demand has at the same time increased for AI, cloud, data engineering, etc. The market remains competitive for experienced consultants in these higher value skills. Internally, we're addressing this by investing in upskilling our own people so that they can use AI as a productivity tool rather than viewing AI as a replacement for their roles. If that answers your question.
And I see Vanessa is here, who wants to wrap up, but I'm going to squeeze in one more question that just came in my DMs there now, and it links actually to the Finance Ghost's last question. And I think it is an important question for a business like PBT is, how do you guard against your staff getting poached? You've got Francois there, he's on a project. The team at Capitec think he's a lekker oak, and they want to like recognize talent and say, well, let's like bring him in internally and not, have him as a consultant. So I guess, it's maybe an unavoidable risk of the business that, you exposing your kind of workforce talent to the client, who then might decide, actually, we'd prefer to have this like talent within our own ongoing internal operation. So I guess, how do you mitigate wanting getting the talent in with how do you mitigate like falling out the other side of the bucket?
Yeah. It's a challenge, but can I first ask, did you say lekker oak?
Yeah.
I like that. Yes, it is a challenge, and there's no easy and one-off quick answer. I think we pay competitive salaries to our consultants, and yeah, that's at the end of the day probably the best thing that we can do. We've got a good community spirit internally within the bigger PBT and within the different subsidiaries. There's some knowledge sharing. There's a lot that, there's training initiatives. There's a lot that make consultants want to remain with PBT, but also we're definitely entering a new era. There's new generations coming in. They think differently, they act differently, and we need to keep up with the change that brings. And I think that's probably the most important part of the answer, is we're flexible always, be it with our clients or our consultants. We don't, we're in a listed environment, but internally we don't operate around, red tape and specific sets of rules that would be there, but it's mendable, and we adjust to make sure that we can give a client what they want, that we can keep a consultant happy, obviously within a set of parameters. But yeah, competitive salaries and remaining flexible to address that poach that unfortunately happens all the time.
But Mark,
whether you have all those things in place or not.
Also, just to add to your listener, it all works in cycles or goes in cycles. So during COVID, when COVID just started, our churn of our consultants, the percentage churn came down drastically. It was very low. And then as COVID sort of became less of an issue and people realized they can work from home, our churn actually increased quite a bit during, let's say, 2023, 2024. And we're starting to see a decrease again in the churn rate. And this is also due to, we think at the moment, with all this changes in AI that everything brings about, people are probably a bit more scared, and they just want to be sure that they've got some certainty in their job. So we're seeing a lot less churn. So it goes in these cycles. COVID, little churn. After COVID, quite a lot of churn. Where we are at now, less churn. So quite nice to have.
And I guess it's also from the client side, one CEO comes in, they want to outsource everything. So
Yes.
they, cut back on teams.
Yeah.
The next CEO comes in, no, we must insource everything. So that cycle on the client side also, I think, has an impact. And I guess for the consultants as well, maybe, if I'm working for PBT, I'm working across multiple projects, multiple clients, there's a huge variety of work where working internally at one organization, maybe that variety of work isn't going to be available to me, versus working with PBT. Yeah, so I think, people also, value, I think, new and exciting projects to be working on and kind of trying to get the most out of their skills on a daily basis, whereas internally it might, after a while, seem like they're on the hamster wheel a bit.
Yeah, exactly.
100%.
I've got one last one in my DMs. We've saved the hardest question for last, so listen to it carefully and please answer appropriately, given that it might be something you simply can't comment on. So the question is, lots of small caps are delisting. You can see where this is going. The share register is quite tightly held. And the question is just the value you guys see in being listed. I mean, the fact that you're here on Unlock the Stock to talk to retail investors, I think already speaks volumes. But just again, answering very carefully, you guys see in the future as a listed company on the JSE?
Yeah, so answering very carefully, at the moment, we we feel that it makes sense for us to be listed. A lot of the shareholders are also employees and management of the company. So there is a benefit of being listed for those shareholders. At this point, we are excited to be listed, but I mean, anything can happen in the future. But for now, and that's also partly why we're here. So yeah, we're listed for now.
Sure. Thank you, Elizna and Francois, for making the time again to support the platform and to engage with the retail investors. Your presentation was quick and the conversation was long and interesting, so thank you very much for that. For those on the call, our next session is on Thursday, which is the 3rd of September, and that will be another returning company, which is CA&S Group. Thank you for everyone who joined us today, especially to Elizna and Francois, and that is all from my side then. Goodbye.
Thanks very
Thank
much.
you all. Goodbye.